Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your metals market update for this Thursday, the 30th of March, 2017, about 3:35 p.m., and that is Central Standard Time. All right, the metals got hit. I warned yesterday that the gold looked strange and that it could be pulling back. It is the end of a month. Remember that tomorrow. It's the end of a quarter. You got certain evening up. That all does take place. Gold actually settled today, even though the last trade right now, and the market is still trading, is down 11.30. It settled in the June at 12.48. Silver's a bit higher than that as well. But silver has been gaining on the gold. Copper market, it's not down 20 on the close. It's actually unchanged on the day. So as we take a look at what's going on the weekly chart, this could be a failure. Now, why do I say that? Well, you have a pattern of a lower low, a higher high. You came up and you're not getting through that 264.90. It's going to possibly create a pattern where you get lower highs and on this break, ideally a higher low, and you start narrowing in like that on the longer term weekly charts. You still have a pattern where the 18-week close is going to try to get over the 100-week close. And if it does that, that's a bullish crossover as prices will be over both. When we go to the daily chart of closes, now you have a down thrust. Up until today, we had an up thrust. And the reason we had that is if you take a look, you can see how the market was moving higher. It was still higher. And right now at this break, you break through these lows, and that puts the market into a short-term down thrust until we get back and over on a closing basis, 1258.80. In looking at just a bar chart as to how prices look, you can see the distribution. You still have the swing lines with a pattern of higher lows and higher highs. So if you're bullish, there's still that ray of hope unless you take out 1243.70. Then, unfortunately, you lose all this pattern. You have no pattern at all at that point in time. The support in the market, if you take out 1243.70, the next support's the 18-day average of closes, moving average of closes, my friend MAC, as I like to call it. That's what I call that neutral point in the chart. And you'll see that over and over as we go through some other charts, both in this video and others, as to how important that becomes if you take that out. For gold to get good here, it's got a cushion of about $4.50 tonight. You don't want to see that taken out. If you're a bull. If you're a bear, you want to see a breakdown, obviously, in the chart. As we take a look at why I keep talking the bias to the bull, by the way, it's because you're over the 18-day average of closes. Now you're nowhere near the theoretical resistance of a Bollinger Band top and a support at Bollinger Band bottom. In terms of momentum, the market did not, NOT, did not lose the embedded reading. It could. So tomorrow's going to be a very important day because tonight if the market opens back down to near this price, it's going to add to the formula and you could get under the 80. But getting under it intraday is not the same as closing under it. So the bulls still have a ray of hope, but they got to step to the table. The argument's going to be the same in the gold ETF, GLD. Why? Well, right now with today's action, it looks like you're going to have lower highs, lower lows. I've got the arrow still pointing up. That's my mistake. They should be pointing down. But you kept the embedded reading. In the gold ETF, lower highs, lower lows, above the 18-day average. This is where support comes in. 2247 begins it down to the 100-day average of closes. So the question is, are those longer-term averages going to be enough to hold this market together? Tomorrow's an important day in it. When you take a look at the gold-silver ratio, what is this ratio? It is how many ounces of silver you'd put in your shopping basket, you'd push down to your local store, and you'd say, I want to trade in this silver for 1 ounce of gold. That's all that it is. That's how I view it. And if the lower the number goes, the more bullish silver over gold is, and that's where I say you are right now. That's why I have it in a down thrust. In the silver market, What is stopping the rally in the market, and I don't have it on this chart, but I do show it in my subscriber videos, is the 200-day moving average of closes. It's a massive important line. You know, I watch these ads on TV right now that are going, silver, the greatest buy if it goes to $200 an ounce. Well, that'd be great. It's $18 an ounce. Obviously, if it goes to 200, you're going to make a lot of money. I mean, I laugh at some of these ads because I hope people don't buy into some of these concepts. I'm not saying it can't do it. I'm saying you're 18 today. What's going to make it go to 200 right away? And yes, I've heard the bulls in silver. 45 years in this business. You think I haven't heard them? I was around when Bunker Hunt moved the market to the $60 mark, but I was also there when the traders got caught and they were just dumping it for any numbers. I have seen all this. That's the beauty of it. This hair is gray for a reason. Therefore, in looking at the market, the 200-day average, and that's where I was, is very, very important. The key to making bull markets is getting over key moving averages. And I'm telling you, as a chartist, the 200-day is the last bastion of fighting that market if it's going to go up. After that, support under the market, not anything else. That's an important point. So something I just want to bring out to everybody, but it's a key number, so it's a resistance number. The silver ETF, failing against the same thing. And by the way, I show the 200-day average in the morning videos, failing against the upper Bollinger Band and that average. But the market is trying to what? It's embed. It's not there yet. It's just overbought. But both of these are trying to do something with it. In the copper, you hit the upper Bollinger Band and bang, the market's fallen back. It's about unchanged, as I said on the day. Support's back down here. Now, I had an arrow up. Do you know why? Because the market was higher when I had put that on. I'm going to change it after the close today. It's not there any longer. When we get to the platinum market, if we finish like this, you're having an outside day down. I got to get rid of this arrow then and make it point down depending on where the settlement comes in. So I'll be looking at that pretty hard tonight. Palladium is still in the bullish chart pattern, but overbought. The metals gave up an awful lot this past week. They had an opportunity to be great. They gave it up. Remember that. Now here's another area that you and I were talking about when you have an embedded reading and you lose it. Where might this market go? One of the areas that I pinpoint is that 18-day average of closes. This is the action yesterday. Tell me where it went today. And that's where I expect the resistance to start now. So while the market has to work off more of an overbought condition, oversold condition, I said that wrong, this between here and the 100-day average should be a good resistance point, but you're no longer in the downtrend than the market had. Let's talk about something I want to give you, a free one-year subscription to Modern Trader. Now here's what I do invite you to do. Go to their website and buy it there. Same thing. You can spend $79.95 or you can get hold of us and you can get it from us for what? Free. Admittedly, this is not going to be the print edition. It's going to be the email edition. But that's what we read. And it comes with a reader built in. Pages turn just like this. You're not scrolling up and down. You will swear it's a magazine. And, of course, you can print it out. In addition, you're going to get the daily issues of Daily Market Focus. So all the articles, they talk stocks, the ETF markets, trading patterns are going to be in there. You're going to hear ideas on optimizing stops. You're going to get fundamental ideas coming up. And, of course, the May issue is going to right around the corner. But here's this issue, and as you can see, buy KOL, sell RL, options, FX strategies, commitment of trader reports, ETFs, all these cool things that you should be looking at every month. And then backing it up, it goes with market focus for you. So how do you get it? It's really simple. Call my staff. They'll get some info from you. I think we have to ask your birth date of the month. When we get that, we put it into the system. Away we go. Call us. Go to our website. Fill out the form there. We'll take it the rest of the way. Right up here, all you got to do is click on what? That icon. If you're watching me on YouTube, the form will appear. Fill it out. We'll take it the rest. I'm Ira Epstein. You have a great day, and I'll talk to you tomorrow.